What's up, everybody? Just somebody confirm that you can hear me, and then we can go ahead and get started. Just letting everybody join. Mic test. Lorenzo, can you hear me? Tell me if it's too loud. That way I can put the audio pickup down a little bit. Just testing sound for now. Let me know that you guys can hear me. We can go ahead and get started. All right, cool. Everybody can hear me. Sweet. So we're going to go ahead and get started. Just to break down what we're doing in this video today, we're going to be going over the charts that you guys requested. We're going to go through a little bit of what happened on the market today, and we're going to talk about what we could expect for tomorrow. It was a pretty wild ride today. You guys saw we dropped 500 points before recovering through the end of the day. But it was a pretty wild ride. Most stop losses hit in the morning. Way to honor your stop losses, everybody. And then before I start, I always like to explain the platform that I'm using in case somebody doesn't know it. I'm using tradingview.com. It's a completely free platform. As you can see, I have it pulled up on my screen. It gives you a lot of information about any stock that you want to trade, and their charts are absolutely my favorite. I don't personally trade on tradingview.com because it's not a trading platform, but you can always hook up your brokerage account to it to potentially trade off of it yourself. So without further ado, let's go ahead and get started. We're going to start with Lulu and MGM, and that's going to be the chart requests for Julian. So let's go ahead and start with Lulu. Which we had predicted a pretty massive breakout from them coming up, but unfortunately they fell below our stop loss before end of day, and they closed below a significant support that they had. So let's go ahead and take a look first at the one-day candle that Lulu performed with today. As you guys could see, this candle right over here that's at open, you guys can see that it pulled all the way down to the 10-day moving average before bouncing up. It fell just slightly below it, but it recovered quickly, which is a good lesson for those who are interested in any breakout plays or perhaps plays to the bottom side. You want to keep in mind that stocks, you want to give them some breathing room below and above the moving averages because they could easily pull back and pull away from them. But it looks like the stock had a pretty massive day. The stock engulfed the previous day's trading, and it had an influx of volume that was larger than most of the selling days that it's had recently. So that's definitely a good sign for the stock. The near future for it is going to be likely green. If we take a look at the more micro picture, so now that we got the macro picture of what happened through the day, if we take a look at the micro picture, you can see that the stock broke out of a channel down wedge pattern, and it finally started making a move after pulling back. So after the stock broke out, it had its pullback, normal pullback, bounced up again, and then finally today it managed to break out from the 315 resistance, but it pulled back and closed right above it. So I don't say that the stock is safe to trade just yet. Unfortunately, it was safe earlier when it was holding over 316, but as of right now, we really want the stock to break over that 319 resistance that it made through the day. That way it can head towards our first price target of 325. But I do definitely see this stock heading towards all-time highs again in the near future, just based on what I'm seeing so far today. And we're going to change this to the 20-day moving average. That way we can get a better outlook. But as far as your trades go, if you are in this stock, you want to place a stop loss no lower than 312.50 because that is going to be a significant support for the stock. The reason why that's a support for the stock is because the stock had bounced off of that resistance at one point. As you guys can see with this red candle, the stock made it, broke back, but when it breaks above it, that resistance automatically became a support. Therefore, you can trade the stock safely off that 312.50 support. So let's go ahead and take a look at MGM. So it did have a little bit of a recovery today as it bounced off the 1550 support. You guys can see that MGM pulled all the way back down to the initial breakout price point. So when MGM first broke out right in May, in the beginning of May, the stock had attempted to break 1550 but pulled back from it, and then attempted to break it again and successfully broke out. So as soon as it broke 1550, that resistance automatically became its support, and you should automatically expect that the stock will eventually pull back to it. And it eventually did, and you could see that it bounced and made a double bottom at 315, one right over in June 26, and again today, which is a good sign for the stock. Now the question is the stock healthy enough for you to trade it just yet? I wouldn't say that it's healthy enough to trade it just yet until the stock starts to make higher highs. As far as I'm concerned, the stock is still making lower lows. As you can see, there's one low, there's another low, and then there's a third low. What I want to see the stock do is I want to see the stock push over the resistance that it created, the resistance that it created at 1633. I would like to see the stock push over that resistance and then give us a pullback to confirm that the stock is going to hold that resistance as support and therefore keep on moving up. Your first price target for the stock should be 1750 before it gets rejected again, and you should anticipate a breakout over 1750. As the stock keeps on moving up, you should obviously be updating your stop loss consistently. Every time a stock breaks through a resistance, that resistance point should automatically start to become your support, and your stop loss should be right below that support. Let's take a look at what MGM's one-day candle looked like. So as far as the one-day candle, this is what we call a hammer doji, which is typically a sign for a reversal. However, the stock is still not in safe territory until it pushes over that 10-day moving average. So we've explained a couple times that the 10-day moving average and the 20-day moving average will act as a resistance to the stock as long as the stock is trading below it. And so therefore the orange line right over here is acting as a resistance towards the stock. Therefore, you should not be trading the stock until it successfully pushes over and proves that it can carry that weight on over the normal average price that it's been trading out for the last 10 days. And here's a perfect example. As soon as the stock dropped below the 10-day moving average back in June 10th, notice how it never crossed back over it. Every time that it did, it got rejected and pulled back down. It got rejected and pulled back down. And then it crossed below the 20-day moving average, which is the blue line, which is even a more significant resistance. Therefore, the stock is still not in safe territory for you to necessarily trade it just yet. Your primary focus should be that 10-day moving average tomorrow if you are looking to get into the stock. Now, Dylan, you had the S&P 500, so SPY, but I'm going to save that till the end because that's the entire market. And I'm going to go ahead and go through Amazon because that's what you requested. So obviously, Amazon, as we all know, has been making impressive highs. The stock made another all-time high today. It goes without saying that this is one of the most powerful companies on the market. But you have to take into consideration that anything that goes up must pull back, and it eventually will have a pullback. Now, coincidentally, that pullback will happen right around some kind of news article. I bet you anything, and that's how just the market works. Some kind of news comes out, the stock starts to have its massive pullback and is overdue for a massive pullback. Don't be surprised if the stock drops to the mid 2500s again, only because it's just what stocks do. They eventually feel the need to correct themselves, and the people correcting themselves are simply the people who are taking profits from the positions that they've opened. Obviously, Amazon is a solid company, a solid investment, but it doesn't mean that it will only move up. So you have to be really considerate about your positions if you have open positions, and you have to watch the RSI. Considering the stock is at an all-time high, we really have no resistance. It's almost like there's no glass ceiling to stop the stock from going any higher, but we do have something called the RSI, which we have to always refer to when we're trading stocks, and the RSI is definitely starting to say that the stock is overbought and it's due for a pullback. Where the pullback will happen, you have multiple supports that you can go off of, and that's going to be, first, you have your $3,100 support, which is where the stock struggled to break out of before. You have your $3,000 support, which is where I expect the pullback to come down to, and then you have your $2,893 support, which is even a stronger pullback. Now, notice how the RSI is also making a negative divergence as the stock keeps on moving up. You see how the RSI is starting to move down. That means that the relative strength index, so the strength in buying the stock, is starting to weaken for the levels that it's moving up to. So you have to take that into consideration when you're trading the stock. Just as fast as you can make money on Amazon, it's just as fast that you could lose it, because just like it's gaining $150 a day, it could lose $200 a day very easily. So always take the risk into consideration when trading a stock that is overbought, because that red day can happen at any minute, and I guarantee you it will happen for the stock. And speaking of another overbought stock, we're going to head over to NIO for Thomas. So we talked about NIO yesterday. We talked that NIO needs to fill these two gaps. Eventually, it may not do it just yet, but it eventually will have to fill these two gaps. And And that day is coming because people are going to have to take profits back down. What I'm thinking for NIO, what is happening is it's becoming almost like a retail stock, and it's also becoming a really sizable investment for a lot of investors. Therefore, the overbought levels are not as they're not as important to most traders, only because they're starting to pick it up from institutionally rather than just to trade it. Therefore, they're seeing NIO as a potential long-term investment. Now, if you are looking at this stock for a long-term investment, there's really no right price to buy it at, because you could just buy it up and hold it forever and the stock will eventually do well. But just be very wary that if you are looking to long-term invest the stock, you may want to keep an eye on all earning reports that it has and make sure that the stock is moving in the right direction and not moving backwards. But let's go ahead and take a look at what the 1-day candles are doing for this stock. So yesterday it had a pretty red selling day, and then today it gapped back up. To our surprise, even though the stock is overbought, but we just explained why it perhaps is still moving up. But you want to take into consideration that the stock is overbought before you go into it. I would say that it's not safe to get into NIO, and it's not safe to hold it overnight as of right now. If you are in this stock, you have a support at $14, because so you could draw your support at $14. The reason why that's your support is because that's where the stock gapped up above. So it's actually going to be right over here at $14.10 that you can place your support. So if the stock falls below, you can expect it to fall to the very next support that it has, which is where it got rejected on July 11th. You can see the stock had tried to break over 1370 twice before getting rejected and then gapping back up. Eventually filled the gap, but that still remains a support that you can go off of. You have multiple supports that you can go off of for the stock, but your strongest support is going to be down here at the initial breakout point, which is going to be at $12. The reason why that's the strongest support is because notice how the stocks got rejected and then came down, struggled, and then got rejected twice with these two candles before finally getting that solid move. And notice on the pullback that the stock had on July 8th, it came all the way down to that $12 support before bouncing up, which makes it a very strong support because the stock had bounced off of it multiple times and it even broke out from it. So if you are in the stock and you have a really high risk tolerance, you can technically give it till $12 for you to keep trading it. Now, if the stock breaks out of 15 tomorrow or it gaps above 15 tomorrow, your new strong support will be at 12 and it will be at 15 as well, because that's where the stock had gotten rejected multiple times before. But as far as the trade goes, I personally don't trust the stock as of right now to keep buying or adding onto your position. I would actually start closing my position and taking my profit unless you're in it for the long haul. Now, Joey, you had AIM. AIM was one of our swings today. Let's go ahead and see what the stock is doing on the daily candles. So the stock has a indecisive candle. It's had a few of these candles as of lately, but so this indecisive candle may not give us a lot of information, but I will tell you that it's giving us an insight that the stock has a lot more buying power than it has selling power. And the reason why I say that, even though the candle is red, is because if you notice, the bottom of this candle has a very long wick. That means that the bears tried to take the stock all the way down to the bottom of the wick at 252 at one point today, but the buying pressure was so strong from its bounce that it managed to close it all the way back up at 267, which is a good sign. Candles with long wicks at the bottom are typically a good sign for any bullish trade. I'm seeing that the moving averages are crossing up, which is also another good sign for the trade, and volume is flowing into the stock. Now let's go ahead and see what it's doing on the hourly candles. You can see that the stock has what we call a pregnant bullish harami candle. So these two candles combined is called a pregnant bullish harami, and the way that's formed is by simply putting an inside day candle of a green candle within a red day within a red candle. So that is a good sign that the stock's hourly, which is a solid time frame to look at, is about to push back up. But remember, nothing is definitive in the market, so we must place our support lines. That way we can adjust our stop losses accordingly. Now you have a few supports that you can go off of for this stock. One of them being at 259. That's where the stock came down today, but it managed to bounce back up. Therefore, you can put a support at 259 and put your stop loss just below it. You can also put a support right here at $2.55. The reason why that's one of the strongest supports is because that's where the stock had gotten rejected off of multiple times before finally breaking out of it. You can even see on the pullback of the bottom of the wick on this candle, even bounced back off of it. So 255 is a pretty significant support, and you also have another support at 250 to go off of for the stock if you have a higher risk tolerance in terms of your stop losses. Overall, the pattern on the stock is looking pretty good. If you guys take a look at the overall pattern, you can see that the stock is starting to notice the pattern that it's doing. It gaps up, pulls back down, gaps up, pulls back down once again, and it's starting to move tighter and tighter, forming some kind of pennant. That means there is a move coming. That move can be to the upside or the downside, so you have to always keep that in mind, guys. Anytime that a stock is squeezing a pennant move, it's almost like 60% bullish, 40% bearish, and that's where our stop loss comes in to save your position in case things go south. So that was for Joey. Manny, you also asked for AIM, so that answers both of your chart requests. Joey, you had another chart request for PENN. PENN is one of my favorites. I saw it moving today, and it moved somewhat like ERI, which is also one of my favorites to trade. In terms of the daily candles, let's see what the stock is doing. So dangerous thing about PENN is that it's trading under the 10-day moving average still. We talked about this today, but it is seeing a little bit more of bullish volume. Notice how there's a stock. This is what we call a reversal candle. So there's a good sign for the stock right here because the stock has that long wick at the bottom. And remember, this is an entire day of movement, and the stock formed that bullish pregnant harami that we're talking about. Notice how the stock's body fit perfectly within the previous stock. There's a good sign that the stock will keep on moving up, but personally, I wouldn't trade the stock until you see it close over that 10-day moving average on the daily candles. So that's your main focus for this stock. Let's see if there's a pattern happening on the micro time frames. And yes, so I am seeing that there is potential for this stock. Personally, I would wait for the stock to push over $30.50, only because notice how that's where the stock dropped, and the moment it dropped below $30.50 back on July 6th, the stock spiraled down out of control. Therefore, that was a pretty strong support for the stock. So you don't want to get into it on a bullish in a bullish position until it pushes over that price point for you to be on the safer side. So what I would personally wait to do is I would wait for the stock to cross over $30.50, pull back down to it, prove that it can stay over that support, and that way you know that that bounce is a safer entry. Because if you enter the stock here where it's currently at, you have no confirmation that the stock indeed is in reversal mode and it's starting to move its way back up. But if it moves over $30.50, now you have a trading range between $30.50 and $31.50, and you can expect the stock to consolidate in between these two price points. If it breaks $31.50 successfully, your next price target is going to be at $32 and then at $32.50. Overall, I like what the stock is doing, but I don't think it's ready just yet to be traded bullishly. Your next chart request is going to be a FCEL, which is a swing of ours. We just talked about FCEL not too long ago. I pointed out that it's making this nice round bottom, and it's making another nice round bottom for us. This is almost looking like a cup and handle pattern that we're looking at here, which is a bullish sign for the stock. Your main breakout price point is going to be right at $3.10. If the stock manages to break out of $3.10, then it's likely going to be going to $3.40. Let's see what the stock's daily candle did. So another green bullish candle that the stock had created a lot of buying pressure from the bottom. Notice how the stock went all the way as low as 277 at one point today along with the rest of the market, but it recovered very strongly and it pushed back up and closed above the previous day's closing price. But it got rejected again at $3.08. We want to call that 310 just to be safe and enter the stock if you're not already in it after it breaks out of 310, with our first price target of $3.23 roughly is a somewhat strong resistance, but it's not as strong as the next at $3.30. Overall, the stock's RSI is looking healthy. There's a lot of bullish pressure going into the stock, so that's another good sign. So as far as I'm concerned, the stock is safe. Its strongest support is going to be down at $2.60 if you have that risk tolerance, but you can also put a support at $2.80 to place your stop loss at. So let's go ahead and see what's next. Daniel, you asked for PolA. I know you had mentioned that one earlier that you missed a breakout on it. Let's see what the stock, actually let's go ahead and take a look at these resistance and see if they're still valid. Nope, They're not. Let's take a look at the 1 day candle, what the stock did today. So the one thing that concerns me about the stock is the lack of volume compared to the day that it broke out. So the stock obviously had a major breakout back on June 30th, and it had 146 million people buying it. Now, ever since that day, the stock has been trading under 10 million every single day, with today as little as 3.6 million. So my question is the hype starting to die down, and is this going to be worth your trade? So always keep that in mind when you're trading the stock. How is the volume looking in comparison to the previous days in which the stock had shot up? And by the way, I want to give you guys an example of what a bearish pregnant harami looks like. You can see that the stock had gapped up on June 30th, and on the very next day, inside that green candle, there comes this red candle, and notice the pattern. Like we said, a bearish pregnant harami. The stock gapped down the very next day, which is a bearish sign for the stock. So obviously this pattern worked. It followed through. The more people saw this pattern, the more people followed it and sold off the stock as soon as they saw it. Now, let's not give up complete hope, because 3 million is still a significant amount for the stock to be trading at. So let's see what its levels are doing. So the stock keeps getting rejected and closing below 350. So that's going to be your primary resistance to look at when you're trading the stock. But since it has a history of moving just past 350 and getting rejected to close below it, maybe you need to put your breakout point slightly above 350 for a safer entry, because you want to look at the stock's history. And if history proves that the stock keeps on failing, then maybe the stock is just not meant to break out. Therefore, I would put my breakout point slightly above where it got rejected before, right around 373, and put a stop loss just below 350 just to be safe. Your very next price target is going to be just the bottom of this green candle, which is going to be at $4.05. Personally, I would let this stock develop. I wouldn't really make any hesitant moves, or I wouldn't take any large positions in it until volume starts to pick back up and the stock does indeed break out of that 350 successfully. Let's see what the next chart is. It's going to be BABA, which made impressive highs, I believe, today or yesterday, and that was for Shanika. So let's go ahead and see what BABA is doing. Cool. So the stock is obviously riding very high. It's riding really extremely overbought on the RSI's hourly candles. Now let's go ahead and check out this breakout that the stock had. So remember how we talked about breakouts always pulling back? Here's a perfect example of the stock breaking out and pulling back to retest that initial breakout point. So you can see the stock broke out of that 236, and then it pulled right back down to 236 and bounced off of it. So there's a perfect example of breakouts bouncing back for them to push back up. So everybody who bought up the stock was comfortable enough when the stock managed to hold its weight at 236 and it bounced back up. Now let's go ahead and see what the stock is doing on the daily candles and see if it is indeed overbought on the daily candles, which it looks like it just tapped into overbought territory. So there are two separate opinions when it comes to overbought stocks. Some people will say that it's overbought over the 70-point RSI. Some people will say that it's overbought over the 80-point RSI. But just know that the deeper it goes into that RSI in terms of points, and the higher it gets on those points, the more and more the stock is becoming stretched out and it's overdue for a pullback. Now, I'm not quite sure why BABA had this intense breakout today, but I will tell you this. This candle is not looking too good for them. This is typically a candle of a pullback or a reversal. So I would take note of that. It doesn't mean that it's going to follow through, but I would definitely make note and maybe take profits on my position or downsize my position a little bit, because a stock that moves this vertically up cannot be sustained. The stock will need to pull back eventually. That way it can cool off that overbought levels, and it can you want that healthy pullback. You don't want a stock to just shoot up, because it's going to crash down just as fast as it shot up. With that being said, you have multiple supports that you can draw for BABA. You can draw the support at 256, and then you can draw another support, which is going to be a lot more significant, down here at 241.40. So you have multiple supports here. You can even put a support right at the bottom of that gap of 244. So you have multiple supports to trade the stock off of. Your resistance point is going to be the highest point that the stock reached before it got rejected, which is at 268. So your current trading range for the stock is between 256 and 268, which personally for me, I think is a little bit too big. You don't want to be in a stock that has a $12 trading range. You want to be in a stock that has maybe a $2, $3 trading range, unless you're playing normal shares. But I know for a fact that a lot of you like to play options, so you don't want a large trading range on a stock that has options. maybe don't use the stock support as your exit point. Maybe use a exit point for the option itself that has a stop loss. But as far as BABA goes, expect a pullback. Maybe the stock can gap up tomorrow, but if it gaps up, it'll likely start pulling back right away. Nate, you asked for team. Let's go ahead and see what team's all about. I don't think I've looked at the stock before, so let's go ahead and see what its daily candles are doing. So it looks like it's making a hammer candle, and the hammer is primarily red with a lot of selling volume. This is typically a reversal candle. If this was at the bottom of the stock, then I will tell you that it's a reversal to the upside. Here's a perfect example. There's a hammer candle and the stock started moving up. Here's a hammer at the top. The stock is likely to start moving down, but it's not guaranteed. Like we said, we just have to take note of these and trade accordingly. So not looking too good for the stock in terms of the daily candle. Let's see what it's doing on the hourly candles. So you don't really have a good trading range on the stock. I would say that there's no clear setup. As you can see, the stock moves sporadically. It just kind of moves up, significantly. There's another vertical move that can't be sustained. It has a bunch of these moves where they can be sustained and the stock just fails and comes back down. You don't want to be a part of a stock that keeps on failing on the way back up. But I will tell you this, the stock did manage to break over a key resistance of 192, and it managed to stay above it. So your primary support is going to be at 192, and then your resistance is going to be at the highest point that the stock made before it got rejected, which is going to be at 198. So you have a trading range between 192 and 198. You can even put a support at 194 if you'd like. The reason being is because notice how that's where the stock got rejected. As it made this green candle, got pulled back and got rejected again, but managed to pull back up over its weight. And then when it came back down in the last 3 hours of the day, it managed to push over 194. So you can put that as your support, or you can put 192 as your support. So you have multiple options. As far as its trading strategy, I personally don't have a trading strategy for you for this one because I don't see a perfect setup. If you are in the stock, just pay attention to the supports that we pointed out and use them as your stop loss points. If the stock does break over 198 indeed, then it's moving up to all-time highs. So let's see what AYX is doing also for Nate. Alrighty, so let's see what the daily candle is doing on this one. So same exact idea. I'm assuming that maybe these are in the same sector, but I'm not quite sure. I don't know what these companies do. But perhaps they're in the same sector because they're making the same exact pattern, which sectors typically move together. So the stock is forming another hammer candle, which is typically going to be a sign that a reversal is coming or a pullback is coming. So be very wary of how you trade the stock and where you put your stop losses, because while you're looking at the stock and noticing that hammer candle, other traders are also noticing that hammer candle, which means that the more solidified and the more reinforcement that candle has, the more likely the pattern will follow through accordingly to what traders think is about to happen, which is a reversal. If you are in this stock, you have support lines at 181 and you have a resistance at 183. Therefore, you have a trading range that's pretty tight. So you have 181 to 183 in terms of trading range. If it breaks out of 183, the stock will likely move to 184 and then eventually 185. As the stock moves up, you should be moving up your stop loss with it over the resistance points that it breaks. Manny, you asked for excuse me. Alrighty, so let's see what the stock is doing. So the stock is just above that support of 0.59. It looks like we've looked at this stock before. This looks like the daily candle is going to be below the 10-day moving average. Indeed it is. So that is not a good sign. That's not a healthy sign for the stock at all. You don't want to be in a stock that's under the 10-day moving average. If you are in this stock, then I would consider a serious stop loss below the 0.59 price point, because if it breaks below that price point, then the stock will move to its next support, which isn't all the way till 0.50. A 9-cent loss, depending on how big your position is, on a 59-cent stock, it could be massive. It could be catastrophic if your position is large enough. So as far as I'm concerned, if you are in the stock, do not let it drop below 59 before selling. If you are not in the stock, then don't touch the stock at all until the stock makes it over that 10-day moving average and starts to give sign of hope. Because the stock had already dropped below the 0.78 support, which is already strong enough, and was strong enough of a break below it that the stock dropped over 20 cents to make it below 0.59. You don't want to be in a stock that's below the 10-day or 20-day moving average, especially if it's a penny stock, you guys. Penny stocks are like fads. They're only in for about a week or so before their style goes out and they get replaced with another hot penny stock. That happens almost every single time. If your plan is to buy a penny stock and hold it to get rich, probably not going to happen, you guys. You guys have to know when to cut your losses and allocate your money to other positions that are going to be more profitable and less time wasting. Next, we have ZOM or XOM by Ramon, which is personally one of my favorite long-term investments, and it's going on discounts more and more as we're talking. The stock is way below the 10-day moving average. Ramon, I know you like the stock for a long-term investment, so if you are looking to pick up the stock anytime soon, it's looking like the time. But, you know, that's on you, not investment advice. I'm just talking based on charts. The stock is, the company is solid. The company will do just fine in the future. If you haven't picked it up for a long-term investment just yet, I would wait for earnings to come up, and I would wait to see what the outcome is, how bad did they hurt because of coronavirus, and how they're willing in the overall refinery market. But if you are looking to trade the stock short-term, as of right now, the stock is not in healthy territory to be traded bullishly. The stock is actually very bearish. As you can see, selling volume is still very strong, and it's only increasing. But it has a very strong support at $40 that it may just bounce off of. You don't want the stock to break below $40. Why is that? If we look back in the history of the stock, when it bottomed out, the biggest gap that it had to the bottom was when it fell below $40, and that's when the stock made this hammer candle and reversed back up. But notice how much it struggled right around $40 before the stock finally successfully broke out of it. It got rejected multiple times right around 40. Even when it broke over it, it got rejected back to the bottom. Even when it broke over, it got rejected again, but it managed to finally successfully break out of it, and it even bounced off of it at one point. Therefore, $40 is your primary, and it's the strongest support that the stock has. If it drops below $40, the stock will likely be in trouble, because everybody who bought it up to take it over 40 has a stop loss set just below 40. Therefore, when all these stop losses trigger, the stock's price will diminish and it will only move lower, hitting more and more stop losses, inducing panic selling, and therefore the stock will just completely fall apart, dropping even lower than our expectations. So if you're not in the stock and you want to get into it, what you need to do is you need to place that support at $40 and wait for the bounce. If the stock does successfully bounce, you want to place a stop loss just below 40 and ride the stock back up. I do not recommend options on the stock until it clears the 10-day moving average, unless you're only day trading options. But that's about it for ZOM. Let's go ahead and see Gene, which, welcome to our group. You joined us today. I'm glad you made it to the video if you did. SNOA. Let's see what this stock is doing. Right away, stock is under 10 and 20-day moving average. Right off the bat, we're starting off bad. We do not want the stock to be trading under those 10 and 20-day moving averages. And by the way, you guys can almost see at this point that it's pretty much repetitive information. You just have to follow the rules. You don't overcomplicate your trading, you guys. It's simple. I personally use the 10, 20, 200, and 50-day moving averages. I use volume, candlestick charts, RSI, and the MACD. Those are the only indicators that I use. I know I stated a lot of indicators, but if somebody has a million indicators on their chart, just know that you probably have 500,000 indicators that are telling you the same exact thing. All indicators do is they tell you the same exact thing. They just have different names. But the combination of the RSI, the MACD, and volume is going to tell you three different things along with the moving averages, which help guide your trading in terms of support and resistance. If you have other indicators, they're all pretty much telling you the same thing. You do not need to overcomplicate it to that price point. I'm sorry. So let's see what the stock is doing on a shorter term. The stock is looking like it is trying its best to move back up, but it just cannot. If you are in the stock, do not let it drop below $6. $6 is going to be your last and final support before you completely give up on the stock and you move on to your very next one. If you are looking to get in the stock is not going to be safe to get into until it pushes over $6.60. So if the stock pushes over $6.60 and it makes a high, what you want the stock to do is you want the stock to push over break out, come back down to retest that support and make sure that it stays above it, and then it should push back up if it is going to be in healthy territory. Two things to keep an eye on the stock is going to be a breakout potential over 660 and a support at $6. Like I said, if you're in this stock and it drops below $6, you need to get out, or else it's going to be free falling for quite a while. Let's go ahead and take a look at Gene for Gene, which I thought was pretty funny. It's actually why I trade Triple Q. For those who don't know, Triple Q is my favorite index to trade. It just happened to coincidentally be the technology index, one of my favorite indexes to trade for sure. So let's see what the stock is doing. So it looks like it picked up a little bit of volume on the daily candles, which is a good sign for the stock. The RSI is still looking healthy on the daily candles, which the longer the time frame you're looking at, the more significant the moves on the indicators are. So if the RSI on the daily candles is not overbought, but the RSI on the minute candles is overbought, then it's not as dangerous as the RSI being overbought on the daily candles instead. So the stock looks good, but we really don't see a pattern from the daily candles. Let's go ahead and see the macro picture, what's going on with the stock. The best way to trade the stock would simply be a breakout play. You don't want to enter the stock here because it really hasn't reinforced its move. You want it to move over 245. That's going to be your breakout price point, and your very next price target is going to be at right over at 253. I know it doesn't seem like a large move, but you know, an 8-cent move for a lot of people is going to be a lot of money. Now let's see what the stock is going to struggle at to get over next. It's going to be struggling at $2.50, $2.53, and eventually it will move to $2.63. I see a lot of hurdles for this stock. I personally would not trade the stock. It doesn't look like there's any fluid movement. Notice how when we charted fuel cell, and I'll go back to it, notice how the stock had a fluid breakout. You see how it didn't really make these like random up and down movements that was just full of volatility. We have a fluid round bottom that took us up to our breakout. That's a nice breakout to be a part of. But if you're kind of forcing the breakout because you want to see the stock move up because you're in it, then it's really not going to work. This doesn't look like a setup for a good breakout. I would personally stay away from the stock until further development. So just leave it alone for now. Jalden, you asked for, and I hope I'm saying that right, for TSM. So let's see what TSM is doing. Stock is definitely overbought on the 30-minute candles. Let's see what it's doing on the 1-day candles. Good for them. I mean, they had a massive day today. They broke over that 62.10 resistance yesterday and did not look back. The stock has been moving up since. Influx of volume. RSI slightly under 80, so it may have 1 day more to run. If the stock gaps up tomorrow, you want to be wary of that, because if the stock puts itself at too high of a gap up, then the RSI is going to also gap up with it, therefore being even further in overbought territory and inducing a pullback that's going to happen any day now. In terms of the micro level candles, let's see what the stock did. So the stock had been pushing up on the 5-minute candles. Let's see. Let's take a look at the 30-minute candles. So notice how the 5-minute candles are not overbought. You know how you see how the RSI is under 60, a good sign. But if you look at the 30-minute candles, which is even more significant of a time frame, the RSI is overbought. If you look at the 1-hour candles, the RSI is also overbought. So take that into consideration when you're doing your trades. And also, if you are in the stock, you're going to need some support lines to go off of because the stock is becoming overbought. So where are you going to put your support lines? You're going to put one at $64 because that's where the stock struggled to get over. And you're going to put another support right at $63 because that's where the stock gapped up to today. So you have multiple supports. Your resistance is going to be the price point that the stock had gotten rejected off of today, which happens to be perfectly at $65. Notice how the candle went all the way up, touched 65, and pulled back down. So this is the hourly candle that it did that. Look, if you look at the 1-minute candles, you'll see that it even gives you further. So all the hourly candle is, it's 60 minutes combined. So 60 of these candles combined made this 1-hour candle happen, that we see the top of it touch. So 60 of the 1-minute candles made this long wick at the top. It just depends on what time frame you're looking at, but they all tell you the same exact thing. Now your next chart request was CEMI. Let's see what CEMI is doing. I know we traded the stock multiple times. This is a low float stock. For those who don't know what float means, it just pretty much means how much stock is available out there for the market, for people to trade. So the lower the float, which means there is less product out there, the larger the move that can happen with just a little bit of volume. I hope that makes sense. Now, if you want to find how I make my trades or how I find some of the trades that we make through the day, I have a low float, high volume scanner, and it scans for stocks specifically with less than 100 million shares available in the market with a large number of volume, and that's how I find stocks that are moving through the day. 8 out of 10 of those stocks are complete garbage. 2 out of those 10 will be nice to trade. So you have to pick them right, and you have to know your patterns. Now, in terms of this stock, let's see what the daily candle is doing. Good for them. This stock. Whoa, what happened here? The stock gapped down from $10 to $4, which, oh, you know what? Somebody had told me about this. They told me that they failed some kind of clinical trial, which, if you know anything about bio stocks, when they fail those trials, they really take a beating, and sometimes they never recover. So the stock had bounced up since. Good for them. They went from $4 and managed to move back up over the 10-day moving average on the daily candles. They are seeing a lot of green volume. I personally would not trade the stock until it manages to push over the 20-day moving average, because there is something called a dead cat bounce, and dead cat bounces, they happen when a stock completely sells off, and all it is it's cooling off the selling period before it starts to sell off again. The way that we can solidify the move on the upside for the stock is if it breaks over that 20-day moving average. Let's go and see what the stock is doing on the 30-minute candles, and if we have any trading ranges for it. So yes, we have a support for the stock at $4.30, and we have a resistance at the highest point that it made, which is going to be at $4.66. So quite a bit of a trading range to look at. I don't think the stock is ready to be traded, to be honest with you. Anything that you trade on this stock is going to be high risk. Personally, I do not like stocks that drop this heavy, because traders lose interest, you guys. And if they lose interest in a stock, they will lose it again. Maybe they're just milking it. Maybe it's like a Hertz, which we all heard of. So personally, I don't see a reason why you should be in a high risk trade like this. I would rather allocate my money to another position. All right, now we have Fazi or Fazi. You requested some Toronto stocks, so let's go ahead and take a look at these Toronto stocks. So they're off of the TSX, which you can trade, by the way, even if you're not in Canada. Let's take a look at what they did on the daily candle. So we're seeing a bearish pregnant harami right away within the last 2 days, which means that the stock could easily fall here. The stock has 99,000 in volume. So I know in Canada the volume is going to be less right away, because I'm aware of the difference between the American stock market and TSX. However, a stock that is only 52 cents, only having 99,000 in volume, is not a stock that you want to be a part of, because 99,000 is certainly not enough to move a stock that's under $1. So personally, I would stay away from the stock. If you are in the stock, I will go ahead and give you some support and resistance to go off of. You have a support at 0.50 and you have a resistance at 0.55. If you want to see any movement from this stock, it's going to be on a 0.57 breakout, which is going to be the highest point that it made where it got rejected. You can put an alert at 0.57 for the stock to alert you when it pushes over it, if it pushes over it. Now what happens if the stock pushes over that resistance point is, if there's enough traders looking at the stock and have noticed its move, then they will automatically also get the same alert that you got, that it broke from that significant resistance, and you should see a spike in volume. If you don't see a spike in volume, then you leave the stock alone. Personally, if you want to trade the stock, it's gotta have at least 6 times more volume, over 500,000, over 600,000, even over millions to be completely safe. This next one you asked for is BYL, which is also on the TSX. I'm seeing the same exact thing. So this one, needless to say, 22,000 in volume. So once again, you have to be careful with stocks that have this low volume. One, because if you have a position large enough, let's say you bought 1,000 shares of this stock, and there's only 22,000 in total for the whole day. There's something called liquidity in the market, and if you don't have liquidity, you can't get in and out of your shares easily. If the stock is trading at $1.04 and there's not enough liquidity, you may be forced to sell your position for $1 rather than $1.04 because there's nobody willing to buy your stock at $1.04. So just because the stock is stating $1.04 doesn't guarantee that there's a buyer on the other side. And with only 22,000 in buying, there's not enough volume for the stock to be traded successfully. Next is FVL. And by the way, I don't mean to offend anybody's positions if you are in these positions, but I'm just trying to give you guys some advice that I've seen work for me personally. FVL, which is gold. So gold, it looks like it failed. So I remember we talked about this stock maybe yesterday, and we talked about it forming this nice pennant pattern for the stock to come off of. But earlier in the video today, we also said that pennant patterns do not always have to break up. They can sometimes break down. And the stock did indeed break down, and it fell below the 10-day moving average on the daily candles. And it closed below it too with very strong selling volume. So this is definitely a stock that you want to be careful of. Notice how the stock managed to bounce off of the $1.10 support, which is also a support that was created on the day of June 26th. So you have a support line of $1.10. If you want to remain in the stock, you can put a stop loss just below that price point for you to ride it safely. But I would say that the stock is not really safe to enter if you want to be in the stock and you're not in it already until it pushes over $1.30 and starts to get back into that trading range that was safe for it to be in, and eventually anticipate a breakout over $1.40. So that's going to be it for Fozzy. Amir, I hope you checked in. I'm not sure you did, but LVGO, I know that's a really, really hot stock. I mean, that is an absolute unit. It has been running since its breakout over $30, which is absolutely amazing. And then they had a nice earnings gap up. Although they did not do too good on earnings, they still gapped up pretty nicely. Stock hasn't stopped since. With that being said, anything that comes up must pull back, and the stock is indeed due for a pullback as it enters the overbought territory. So how do you trade the stock now? If you're already in it, let me give you some support and resistance lines. So obviously, when a resistance line was set, now that it's broken out of, it automatically becomes a support. So we just change that to support and see if there's another resistance or support that we can go off of. Indeed, there is right down here at 95.60. So you also want to put another support at 95.60. You also have a support right at this very point at 105. But a stock this overbought is not only going to pull back to 105. It's going to pull back further, you guys. The more overbought the stock is, and the higher the cost of the stock is, the stronger the pullback is going to be. So expect a pullback from this stock to either 100 or 97.50 before it keeps pushing back up. If it does, if it doesn't, this will be dictated by another earnings report, which it has August 6th. Overall, I'm not quite sure why the stock is moving up so much. I haven't done any research about the company to see if they, discovered some kind of massive cure, or have some kind of, access to coronavirus funding. But overall, the stock is looking pretty stretched out. This vertical move is easily going to get capped soon, and it's going to pull back down to cool that overall overbought level. Lewis, you had SHLO, which I call SHLO. Let's see what it did on the daily candles. So the stock's daily candle is pretty indecisive. There's not really, I think we talked about this earlier. If I'm not mistaken, you had mentioned it in the chat, and we talked about the daily candle being indecisive. This can go anywhere because the stock's previous candle had a lot of selling pressure, but today's candle had some buying pressure, but volume was less. Therefore, the stock could literally make any move from here. We're not really seeing any significant candle that can reinforce a specific movement to a specific direction. But if we take a look at the 30-minute candles, we are seeing a pennant pattern. And remember, pennants can break either up or down. Likely to break up because the stock is on its way up. Break out. So the stock's forming a pennant pattern. The stock's breakout point is going to be right at $2.10. So if you're in this stock, you want it to stay over $1.80. If you're not in the stock, you would want to enter it at a breakout $2.10. Your initial price target is going to be $2.30. And after that, we'll go ahead and start to dictate where the stock is going to go next based on previous support and resistance lines, which happen to be right at $2.60. So if the stock does indeed clear $2.35, it will likely move to $2.60 based on historical analysis. So that does it for chart requests. I know there's one more for SPY, which I wanted to save till last, only because I like to go over the entire market and what happened through the day on at the end. So what is SPY doing and what did it do today? So very clear bearish engulfing. There is a bearish engulfing that happened on the daily candle, so we can expect a red day tomorrow, but it's not guaranteed. Remember, the entire market is very depicted right now by coronavirus, Trump's taxes apparently, and just other factors like economic factors, which are induced by the coronavirus. So if we get some kind of good news, maybe tomorrow about another stimulus package, we might get some green in there. But as far as I'm concerned, and you need to go into the market taking note of this, SPY made a bearish candle over its previous day, which means this engulfing can lead it to go down further. Now, what is the stock doing on the micro time frames? We can take a look that there is absolutely no pattern to this stock. It's moving sporadically at this point because of confusion and concern from overall traders. Notice how we're seeing a sell-off nearly almost every day at the end of day. The reason why we're seeing this is because nobody wants to hold positions overnight. People are scared, traders are scared. Therefore, they exit their positions near the end of day and they drop the market lower. Every time you exit a position, you are contributing to that drop in price because you're no longer interested in the stock. Therefore, demand has gone down. And that's what's going on with SPY. It's at a significant resistance, which if it breaks, it will make it back to the initial, to one of the initial drops. So notice how SPY, if we take a look back, made it back to 320 and even 323, and it pushed back since. Now it's trying to fill that gap that it pushed back from. And in order for it to fill that gap, it needs to have a strong sentiment. And if it does indeed fill that gap successfully, it's going to need to break over the bottom of that gap, which happens at 318 and 70 cents. And then your next resistance is going to be at 323.30. Now the NASDAQ hit all-time highs. So that's good news for the NASDAQ. And SPY is likely to follow, but it's not guaranteed. Because when the market hit rock bottom back in March, Apple was the one that hit rock bottom and bounced up with the entire market. Now Apple is hitting all-time highs, and the market is also hitting all-time highs, which points a little concern to what could happen next. Remember, guys, traders and intelligent investors on Wall Street will take it up just to crash it back down, and you need to be prepared for that crash at any given moment. If you don't think that it can fall further, you need to rethink that analysis because it can definitely fall further down than it did today at a much stronger sell-off. Today was a baby sell-off. Just look at this sell-off from 322 all the way down to 297 to get a really good glimpse at how bad a sell-off can get. So anytime that you complain or you're sad that your stop loss hit and the market recovered, think that you could be caught up in a very bad situation if you don't honor those stop losses. As far as my concern goes, my sentiment for the market on a daily basis goes in completely neutral, but I take into consideration everything that I'm seeing on the chart. I'm seeing that bearish engulfing on the daily candles. Therefore, I will trade accordingly, and if I notice there's a little bit too much of selling volume, then I automatically remember what I saw on the chart, and I think to myself, maybe it's time for me to close my positions and stay all cash, because cash is king when you don't know what's going on. If you ever have to ask yourself the question, what is going on in this stock, then you need to exit that trade completely until you figure out the pattern. If you look at SPY as I'm looking at it on my screen, there's absolutely no pattern. The stock is not moving up and it's not moving down. It's just completely moving sideways. Yes, it seems really dramatic on your end because Robinhood makes their charts really dramatic. But really, guys, the stock only dropped from 316 down to 311 today. That's not a very big sell-off. You will see a sell-off in your trading future, and you will be surprised at how low the market can go. Before it bounces back. So with that being said, I want to reinforce the message. go into the market on a daily basis with absolutely no sentiment, but take note of everything you see on the chart before you determine whether the stop loss should be set at a safer zone or at a lower zone. Because remember, I give you guys the safest stop loss. If you want to place a stop loss at a lower place, then take into consideration the overall market conditions and just simply ask. You can simply say, hey, what's the next support for this stock? That way I can figure out if there's another stop loss that I want to let it run to, depending on your own risk tolerance. But with that being said, I'm going to leave you with that. I hope you guys enjoyed the video. If you haven't subscribed already, please subscribe unless you didn't like it. If you haven't liked the video, please like it. Thank you for checking in, and I hope I answered everybody's questions. Have a great day.